Hey guys, it's Serge here. I just got back from a meeting with a hedge fund manager. We discussed a bunch of things regarding the market, and one of the stocks we were looking at a little bit closer is Apache Corp, which of course is an oil and energy services play. And basically, the company last week reported a much better than expected loss, so it still lost money, but not as bad. The problem was the stock couldn't really trade up on that. Of course, part of the story was a stronger dollar. But let's have a look at the technicals on Apache itself so you kind of see what we're seeing here. So obviously, along with everything else energy related, that's been a tough struggle for this stock over the past few years off of the 2014 top in the summer. And basically, the stock fell into the abyss here, made a lower low in January. But what's been starting to happen here is as this rebound occurred in the broader market, you can see the stock found a lot of resistance right at basically what used to be support, somewhere in the 56-ish dollar area. And basically 2 weeks ago, we saw a bearish reversal. We saw basically buyer exhaustion. And last week, even though it was a bit of a wild ride last week, the stock still closed lower on the week. So we're sort of stuck from that perspective. We continue to hold the 8-week moving average. But I continue to think here from a reward to risk perspective, chasing the stock higher here is just a bad idea. Momentum oscillators are still very overbought, certainly on a weekly basis and on a daily basis as well. We've got a lot of resistance. We've got at least the start of a potential bearish reversal, and I think implied volatility on one of my 6 screens here, I should see that. Yeah, implied volatility is still like 46%. So still quite high, both in absolute and somewhat also in relative terms. So I think there's an opportunity here to play this stock to the short side. I think upside is probably quite limited, bearing any acquisition or whatever could happen. I doubt that'll happen, but I'm just saying. So I think the stock here after that strong rally off of February, sets up for a decent play to the downside. I'd like to see it first close below say the 51.52 mark on a daily closing basis. That would give me more confirmation for this to take place. But I think the upside here is quite capped. Also, keep in mind the dollar has had quite a strong bullish reversal over the past week or so, and if that continues to manifest, then that'll continue to put pressure on not just energy stocks, but the broader stock market itself. One of the reasons why the broader stock market rally off of those February lows, besides being oversold and so forth, it was a dollar that continued to weaken. So if we see a reversal on that should certainly start weighing on energy stocks and likely the broader market. So please give me a thumbs up on the video, like the video, subscribe to the channel, and I'll see you in the next video.